Switching gears here, DoorDash serving up a strong quarter. The stock is sitting around $74.50 a share, up by about 1.5% pre-market after the delivery service reported a 35% growth in revenue and a record number of deliveries. The company reported its total number of deliveries in Q1. It actually rose 23% to 404 million. It also added the most new customers to its service since Q1 2021. I know they got a fair bit of my dollars as well during the quarter, perhaps a line item just for Brad Smith. But those orders delivered, I mean, this shows the strength that they've been able to build up during the pandemic and continuously that compound growth rate that they're going to be relying on going forward from here, all of the new signups that they've been able to get and the order volume. This is going to come back to the number of merchants, the number of restaurants that are both reopening in some capacity or another, but that are still relying on a DoorDash service to really fulfill orders for those clients who don't feel comfortable going back into that setting too.
It's also interesting to me how DoorDash, like many of the other sort of new tech companies, have tried to adapt the subscription model that has worked so well for the likes of Amazon, for example, that, you know, if you're going to sign up a customer as Prime, that they're going to come to the site more often and spend more money. And likewise, DoorDash signed up a lot of new customers in the first quarter of the year, and that increased frequency as well. If you're paying that monthly fee, you know you're going to go to DoorDash and order more often. That's something, of course, that we've seen Uber and Lyft try with varying degrees of success. DoorDash seems to be working for them to some degree.
Look, growth is still slowing for DoorDash, whether it's sales, orders, adjusted operating profits. It is what it is. You're seeing the stock move up, I would say, here in the pre-market because it wasn't as bad as some folks would have feared, just given what we've heard from the restaurant companies over the past few weeks. They've been very disappointing in terms of sales or profits. But I did like this earnings call, guys, talking about their team saying, look, you could order food and still go in and have an enjoyable dining experience. It doesn't have to be one or the other. And it looks to be, at least in the case of DoorDash, some of these pandemic trends are in fact staying in place.
Yeah, and to Julie's point, too, one of the things that we've seen in the rewards, it's about the customer lifetime value, too. If you've got somebody that signs up for the rewards program, it is already perceived that on whatever percentage of those new customers that they're getting, if a subset of those sign up and are part of that rewards program, that you're going to get more loyalty out of them over the long run, higher ticket prices. That's all beneficial to DoorDash and the end partners. That allows them to go back out and sell to get even more of those end partners onboarded. And so for DoorDash, I think it's really, at this point, making sure that you've got the necessary dashers, too. That's something that we got in the conversation about with Uber Eats earlier this week. Well, Uber as a whole earlier this week.
I need more points for my Dunkin' Donuts app. DD Perks is not hooking me up lately. I buy enough stuff from there, inflationary stuff. I need more points, Julie. I want to get you a free coffee.
Okay.
You'll take it, right?
Let's